Hi and welcome to a weekly outlook. This is Kim speaking on Tuesday the 14th of November. So got quite a lot of data out this week. I just, well, at least speakers, let's just start and run through that first and then we'll look at the technicals. Just had the inflation data coming out. It came out slightly less than expected at 3% there on the CPI for the UK, and retail price index was slightly behind the curve there. Not massively, and still 1% above the rate that they're looking to achieve. So it's just overrunning at the moment, but not by quite so much. Okay, we've seen a reaction to that, and the pound sold off quite strongly immediately that came out. But looking forward then, we've got Draghi speaking as I'm talking. He's doing the introductory remarks, and there's a panel discussion going on, which the Bank of England Governor Carney speaking, the Bank of Japan Governor speaking, and the Fed Chair Yellen speaks at. So they're all speaking at this due to participate in panel discussion titled "At the Heart of Policy: Challenges and Opportunity in Central Bank." Oh goodness, okay. That would be one to miss. Not miss. Okay, we should may see comments coming through from that. So it may differ very little from what the speakers have all said and their thoughts. So I don't expect massive volatility from it, but we may still see some. As we run through today, then other numbers coming out. The PPI in the US this afternoon, another inflation number. At 1:30, the more important one is the core CPI tomorrow, but producers price index is still quite a number to be watching for in this current climate. We have got a speaker later on speaking in Oxford, so not particularly interested in that. Beyond there, we've got tomorrow then important fact numbers coming tomorrow. It's the employment report coming in the UK there. Most significant number will be the average earnings index. Now this is expected to 4.1. Now if that does, that's suggesting then obviously we've just seen the inflation rate come out of 3, and earnings will be tracking still nearly 1% behind the inflation, which is not particularly good for the economy, etc. So GDP, etc. will get hit by this. So if this comes out as is, I don't expect it to rally at all. If it comes out lower, I expect it to sell. Even if it may come in line, we may see a bit of selling going off there. In terms of the unemployment number, the claimant count change, they have less significance at the moment. It really is all about average earnings. Looking down further in the afternoon, as I've already mentioned, you've got the US inflation data coming out and retail sales, core figures, key figures coming out, and numbers coming out here. Looking forward and expecting some volatility tomorrow afternoon there. Beyond that, then we run into Thursday. A bit of a quieter day, although we start off with the Australian employment data again. Employment change here is more significant. They don't really headline with the income. Okay, beyond that then, we've got Carney speaking 2 p.m. in the afternoon there, due to speak on Monetary Policy Committee. Okay, that will be in a forum in Liverpool. There we go, we've read that. May create some volatility around about 2 o'clock tomorrow afternoon. Aside of that, unemployment claims, there's just normal weekly numbers coming out there, nothing significant. Through to 2:15, compared to all these numbers, they rarely give too much in the way of movement. We have got a couple of FOMC speakers coming out due to speak charge financial analysis. Okay, not expecting too much from those. Right, we got Draghi speaking on Friday morning, 8:30. Okay, that will be exciting as well. Maybe some volatility around that, but I wouldn't expect to see or hear anything that's not already been said. Aside of that then, Canadian CPI on Friday afternoon, and that is it for the week. So nothing significant beyond really the bigger numbers are the average earnings in the UK there, and maybe the inflation data in the US. So tomorrow is the big day. So let's get on and look at these markets from a technical point of view. And well, I just pulled it back to a monthly view. It's good to look at the monthlies occasionally, and we just see the monthly on the euro just last week really pitched down towards the monthly 8 there. So that's where it's sitting at the moment. So it's having a little bounce off that. Weekly wise, we've just run it. So here we are, rock and a hard place, just run into the weekly 8. So we'll just see how things react there. There's quite a lot of other factors there and lots of moving averages, which are probably a similar calculation over the different time periods. So we've got the daily 34 sitting there. It's just running into at the moment, and the shorter time range. But what I'm looking at just purely at the pattern here is the key thing is, can we push on beyond these levels? Is that weekly 8 going to stop us for now, or have we got some more upside? If we start breaking the 34 here, I'd be looking at the daily 50 and so on. These are not big moves that we've seen lately in the euro. If you look at the average true range, it's been slipping down to, I mean, it's reading at 66 pips there. Average true range per day. We've seen days like yesterday where we sat in probably 35, 40 pips. Very tight ranges. We've seen a bit of a breakout this morning on these on what we're seeing here. Not at all surprising when we've been just sitting there for so long. In a tight range, but it's whether or not it can hold out of this range. As I said, it's got some key points. If it does start breaking above this level, the weekly, the monthly figure and charts certainly look quite bullish still. I mean, even on the weekly, it still looks like there's some potential bullishness to come through here. We've got still got the monthly 50 pointing south, which it's been running south for a long time, and we've had several months up since that. So there's no reason why, if it can continue putting in a bit of a gain here, if it closes above that at the end of the month there, we could be bullish going forward towards that monthly 200 at some point. But that's probably big picture, and the way we're sitting, I expect much more in the way of chop in these markets in the coming months. Okay, looking at the pound. And the reason I'm looking at more chop is the fact that there's very little to differentiate between some of these markets at the moment. So the pound, it's from a monthly, it's not really shown us too much clearer than anything else. It's just come down to that weekly, and it's been hand railing that weekly 21 for a long time now, many weeks, and it's breaking. There was a bit of a trend line where it's sort of stepping it sideways out of that a little bit, maybe. Not particularly clear at all there. Coming to the daily point of view, and well, you can see the chop that we've had of late, and it's just the way it is. It's a range bound market. It gives us opportunities to trade the range at times. Of course, that will break at some point, one way or the other. Now this is just sitting. I've got a regression channel on here. There is a chance that we could, if we start pushing back up and get above that monthly pivot at some point this week, well, the regression channel trend line becomes a decent target. We often see it retested after it's broken out the lows here, so it's just a case of waiting for it to see if it can push up first above the monthly pivot. It becomes a reasonable target at that point. But the pound has held up particularly well of late, bearing in mind the rocking and rolling in the politics. Okay, dollar yen. So again, I'm just looking at this weekly view really. Actually, we can flick onto a monthly view. I don't think it really tells me too much more than what we can see, apart from well, it just clarifies. It's just how it's struggling to get beyond that monthly 34 at the moment. It's not really managed to do too much else. It's coming back. It's sitting really on the monthly 8, weekly 8 rather. It's again range bound in terms of what we're seeing here. If I just bring it to the dailies, you can see how tight the range is. Now, a break below the monthly pivot would maybe give us a bigger opportunity if we can get beyond that 34, which has already been lower than where the price has already run lower than where the 34 currently sits. So maybe, and it's already been tested, so maybe if a break of the pivot, the 34 average, we could see running down to the next support line there really is that 50 MA. If it carries on pushing up here, well, the R1, the monthly R1 seems a reasonable target. However, as I say, it's very range bound. It's a tight one to predict whether this is going to push up. I've still got there was some I'm looking at you can see the average true range has dropped down a lot here, but I was looking at it was sort of divergence, weak divergence sitting into the highs there previously, and we've not really clarified too much here. It just may chop, and can't see much more than that really. So looking at the weekly on this, it's just come back one step and look at the monthly here, and you can just see we're just at our bottom bands there, just breaking through. Let's come back to the weekly. It's not overly clear here, but we're just sort of breaking that weekly 50 now. It's been sitting around it. It's broken the prior lows there. There is some weakness coming through. No, continuing, should I say. It's put lower highs in here, lower lows, so the overall pattern is weak. It's been chopping along in this tight range, broke out yesterday. Having a bit of a recovery this morning. It may just run back into the body's sort of level, that sort of 76.44 area. It may just be a point of resistance on the retest, or maybe back towards that daily 8 and may retest it. Of course, we'll be looking at the employment data on Wednesday morning, so which will start coming through. Was it Wednesday morning, and then we've got Thursday morning for the real data. So actually, wage price index comes out a day earlier at 12:30. So that may be a key mover tomorrow morning. Okay, that's the Aussie dollar. It's looking weak. I'd be looking, if I was trying to trade it, to find sell points into any retracements. And finally, the Canadian dollar. Now, I've been looking at this, watching this quite closely at times. It's with oil holding up. Let's just flick oil on here for a moment. It's the daily price of oil here. It's been holding up pretty well. I was expecting that Canadian dollar would have probably improved more than it really has. It's had a decent push up here. Oil, it's sitting at much better rates. However, that itself is looking a bit bitty. We're seeing all these sort of bars here now. As long as it consolidates, that's fine. It could be just consolidating, ready for another push up. As soon as it starts breaking below this daily 8, I think oil may be seeing a bit more of a correction, maybe back towards the 21 there, maybe even towards its monthly pivot at some point. A $50 barrel is what a lot of people are expecting it to be, $55. Well, it's just sitting above that at the moment. Coming back to the Canadian dollar then, if oil starts flattening out, the Canadian dollar may start flattening out, and what it's basically doing here, had a decent sort of recovery in terms of strength against the US dollar recently. It's just come back out the time frames and just run back to the monthlies as we've done with everything else. You see here we just bounced into the monthly, and we put a very bullish monthly bar in there. There's a pivot swing bullish wise. However, it's just run straight into the monthly 8 there, so it's not looking particularly strong from that perspective. It's had its reaction. The last couple of weeks we've seen it sell off. This week, well, it's having a little bit of bounce. It hasn't quite got back down to the 8. It may be, if it does roll over a little bit further from where it's sitting now, it's just on the underside of the monthly pivot. If it rolls back, just watching. If it gets back to that weekly 8, which may be a buy opportunity, again, it's still in a sort of, it would still be in a sort of bull flag. Okay, it's arguably in a bear flag at the moment, which it's done here, but it's still in the shorter time frames in a bull flag, which we would be looking at. So we're just seeing, I'm just looking at where it is from here. If it breaks above the monthly pivot, well then I'm really targeting back into that regression average, maybe even a push up towards the 200 at some point, but certainly looking at that regression average. A break here of the trend line itself that I've drawn on, which is separate to the regression level. It's been holding it for a couple of days. If it starts breaking through that, well then really I've become a little bit more bearish on it, and it may be expected to S1 down to maybe even the daily 50s there. So that's pretty much it, all the news excuse me, expected for this week and the technicals. Have a great one. Bye for now.